Hello beautiful traders, how you guys doing? Welcome to our channel once again. All right, so in today's video guys, I'm going to teach you how to trade trend line breakout like a pro, right? So if you've been emphasizing or trying to learn how to trade, right, this might be for you. Also, I believe you have heard the narrative that says that trend is your friend. Now, it can only be your friend when you understand or you learn how to trade or how to draw your trend line correctly. So we're going to show you using practical example after we have established the concept on how to draw the trend line. All right, so in case you've not subscribed to this channel, please kindly subscribe, like this video, and share with your friend as we dive into the trade properly. All right, so now this is let's use any of these instruments. We are using pound USD as an example. All right, so before I start explaining to you how to draw the trend line correctly, we need to understand this concept that, what they call the market structure. All right, so when is a market said to be in a trend? Now, believe you me that every market starts with what? An impulse. This is very, very important. You might take a note. All right, so every market starts with an impulse. And if this impulse will always 99.9% correct himself, and after which another impulse comes, and after which he corrects himself, another impulse, and stuff like this. Okay, so once we start seeing a market move like this, check any market, indices, crypto, forex, stocks, they all move in the same form. All right, so but now what are we going to identify before we're going to put a trend? The first rule establishes here say that once the previous, this is an impulse, once the second impulse breaks the previous high of an impulse, a trend is set to occur. For instance, if there are a lot of guys that might decide to put a trend like this, I've seen that in many cases, something like this is wrong because this market has not actually broken the previous high. So once the market breaks the previous high like this, you are expected, you are permitted correctly by the rule to place a trend like this. Irrespective of what happened to the market, this trend line is valid. And all you'll be expecting or waiting for is for the breakout of this trend to occur for you to make a decisive move, okay, of the market. All right, so now, having established the concept that a trend, a second impulse must break the first impulse before we put a trend. Now, if the market goes up like this and pushes high again, what are you going to do? You change this trend and you put it here again. So the same thing applies for all market movements as they keep going higher high, and stuff like this. Okay, so now the setting applies in the other way around, whereby the market start breaking down and correcting itself, coming down, correcting itself, coming down. So provided that this move has broken the low of this, we put what? We put a trend. So this is a valid trend. Okay, it's a valid trend. But if it has not broken this low, well, there's no need putting a trend here. So this is a lower low, lower high, lower low, and stuff like this. So obviously, even if you are trading like we trade wave theory or Elliott wave, they all get their concept from this analogy, from this market structure. All right, so understanding a market structure is the best thing that can ever happen to you, your trading career, because market structures are about the price actions, are about the movements of the price, the patterns that the price are forming. Okay, so now having established that, how do you trade using this? Now, so let's take a look of the practical markets whereby you can give us a full analogy. Now, the second thing you need to understand, like for now, is you need to know the time frame, the kind of trader you are. All right. So personally, I swing trade most of my crypto pairs, and I day trade some of my forex pairs. So you need to understand the kind of persons you are. All right. So there are two things that I need to pay attention to. Now, if you're a swing trader, we need to pay attention to daily charts and 4 hours, guys. Daily charts and 4 hours is king for swing traders. For day traders, we pay attention to 4 hours and 15 minutes or 30 minutes, guys. This is what we pay attention to. Right then, for scalper guys, scalpers, okay, you pay attention to 1 hour and 5 minutes. Okay, 1 hour and 5 minutes. 1 minute is crazy, guys. I wouldn't recommend that. 1 hour and 5 minutes. So why am I pairing these time frames? It's just because for you to be profitable in the long term, you need to know know a sense of direction of what is going on in a higher time frame. Okay, so this is the way we have paired it, and I'm going to show you why we paired it this way, okay, and why you should be looking at the market this way for you to be profitable in the long term. It's not about really winning or losing, but being consistent in your winning, and that's why you need to know where the market is going in the long term. All right, so having established that, now let's go take a look at the market. Now, as I said, let's assume today we are day trading. Okay, we're going to day trade pound USD. So the first thing you need to do is to know where the market is heading. Okay, so you can see what is going on here. Now, where is market heading now? For this move here, guys, for this move, do we have a trend for this move? Do we have any trend? This is 4 hours. This is a move, an impulse. Has this completed? No, nobody can tell, okay, because we are just in the midst of this, in the middle of this move. So the market has not actually given us any sense of direction apart from this first move. But now look at it the other way around. If you flip up this coin, we can see there is a trend that's even established in between. And what is that trend? We have had this impulse down, and this corrective move, and another impulse down. Remember what I said? That move must also break this low. But remember, this is another impulse on its own. So what are we expecting in a nutshell is either this move finds a support at this point and pushes high before dropping. Now, believe in me, if we go to a higher time frame like daily charts, you'll start seeing that this market also is what's trending downwards. Where is the bias of this market? The bias is towards what? The market is trending downward. It's obvious, it's clear that this market is coming down. So what are we doing now? In the lower time frame, we are going to find a pattern that aligns with the higher time frame move. Okay, you find a pattern that aligns with the higher time frame move and take in that bias, because so that everything will sync together. When the lower time frame will sync with the higher time frame, man, that is the magic that you want to be in. That's where you make the biggest amount of money in your trading career. Okay, so remember we said that we are assuming that we are day traders for now. So we are taking the first bias on the 4 hours. Okay, looking at the 4 hours, because the 4 hours has given us a clear trend on this move. That is what? An impulse, a correction, an impulse. Okay, so what we are going to take a look on now is to move down to 15 minutes. If we move down to 15 minutes, like last week, we took this trade, and even this morning, I took this trade. Okay, downward, we took this trade. So why did I take this trade and this and this? Just because of this concept that I'm about to share with you. All right, so now having established this, and you move down to 15 minutes, having drawn this trend. So if you move down to 15 minutes now, you begin to see what the market is doing. So now we made it clear that ever since the market drops this sharp move, the market drops like here and it moves up sluggishly, drops again. So we see that this is A, B, C, and another B on the bottom. So we have this A, we have this B. So what are we expecting? We've seen that the market has given us an impulse. This is a correction, and we're expecting another impulse for this move to be completed. So ever since this trend was broken at this point, because you have seen A, B, C here, this was broken here. So we're in confirmation that yes, any trend or any pattern we see on the sell will be a absolute sell for us. So we had this an impulse, we have this correction. So we try to equate it to be what? This is a contracting flat, and at the break of this, we are taking a sell. We took a sell at this point. All right, so here also we had a running flat. We have this running flat here. At the break of this trend, we took a sell at this point and we were profitable. And just today, we also had this. We had this regular flat, this is impulse, this correction, this is impulse. So we took this at the break of this, we are on a sell, we just closed today. All right, so that is why and how we take trend breakouts in sync with the trend. All right, we sync with the trend. Why we always have a higher bias from the time frame is just to be on a safe side, because you might assume that the market is reversing. For instance, look at what happened here. Look at what happened here at this point in time. Okay, look at this pattern. This is kind of a reversal pattern. Okay, a reversal pattern. If you have seen this on a 4 hours, would have been glad to take this trade, but we know that this is just an expansion of this move. Okay, this is an expansion as the 15 minutes. So taking this trade will be like for scalpers who just want to take for a few minutes and market will continue dropping because the bias is on the downside. All right, so that is it. So let's take us also another example of this. So assuming we just first of all have a bias to go to 4 hours. If you want to get the bias or which direction you want to trade, you first go to the 4 hours. So once you come to the 4 hours, you put your trend. The first thing you need to do before you put your trend is to define your impulse, your correction, your impulse. You can see here, we have this here. You have the impulse, you have correction, you have impulse. You can draw your trend here. So once this is established, then you need to now start identifying the patterns. Okay, any other trend that will confirm or in sync with a downtrend will be a setup for you. Then all you need to do is to start looking for a pattern in sync or in line with a downtrend. Okay, we've seen that this is a running flat. Okay, for you to be on a safe side, the best way to take this trade is to put a kind of a sell stop. Okay, anytime the market is ready to move, then you will join the party. All right, so that's it. And where we put those sell stops is where the market has found what? A kind of support. Okay, when the market has found a resistance, this is the resistance, sorry, the market has found a resistance and it pushes up again, you put a sell stop. You can see the one sell stop, this one is sell stop, and such like this. Okay, so that is how we are placing our trade, because we know that the bias is what? On the downside. The same thing applies here. We took this trade, draw a trend, at the break of this you are in. You draw a trend, at the break of this you are in. Here the market expanded, this was an expansion. So all you need to do, you put your stop, entry stop here, sorry, sell stop at this point, because you know that this is just an expansion of the market. Market makes an impulse, it corrects itself that another impulse is coming, and that was a massive sell for us. Okay, so that is how we are trading on any pairs, guys. Identify the trend on a bigger time frame. For 15 minutes, for daily, we use day trader, we use 4 hours to identify the trend. We use 15 minutes to enter the trade and get the pattern in. All right, so that is just how it is. That is it, guys, for today. And if you like this content, if you want us to produce more of this, kindly like, subscribe to this channel, and I'll see you on the next video. Thank you.